What does it say, though, that maybe like a few tweets from someone like Elon, even if that's not the main story, we certainly see times when a few tweets from someone like Elon can generate tremendous volatility?
Yeah, thanks for having me on, Joe. And that's a great question. So for those of us who've been in crypto through multiple cycles, 30% dip is just another Wednesday in crypto. It
Yeah.
is a volatile asset class, but the thing to remember is that Bitcoin is still up 300% year to date. These are healthy corrections. What we're seeing is if you look at the actual data of who's doing the selling, these are primarily new market entrants that are panicking. And in an emotional market, we view it as a healthy correction and are staying focused on the long term.
This was still a pretty epic drawdown here. And when we talk about the legitimacy of this as an asset class, and more importantly, as a significant component of someone's portfolio here, Soona, I mean, what do you tell them? How do you sort of coach them through this idea that you're going to have to deal with these types of drawdowns?
Right. So the important thing to remember is that nothing about Bitcoin has changed. It's still using the same consensus. It still has the same proof of work system providing security for it that keeps the protocol moving forward. And it still serves as a global liquidity instrument. So to the extent that those things are all true, the only thing that's changed is Bitcoin's gotten cheaper. And right now we're seeing it at, frankly, this is a fire sale. So if you liked Bitcoin at a $60,000 price, then you should love it at a $40,000 price.
Oh, well said. I am wondering, though, because you said corrections like these are healthy. Are they healthy when, like you said, it's coming from newer entrants, maybe retail buyers, maybe leveraged up, maybe for sellers? Does that change perhaps maybe the nature of the sell-off?
So you cut out a little bit, didn't entirely hear the question, but these are healthy sell-offs when they are primarily retail driven and they're new market entrants that are coming into the market and are panic selling when we're in an emotional market like this. If you look to corporate treasuries and you look to what institutions are doing, they are holding on to their positions. And so you don't want to look to what folks are saying, but you want to look to what they're doing. To the extent that Tesla clarified that they aren't selling any of their Bitcoin, that's a really important indicator to us and what we as a venture firm at Volt Capital focus on when we're looking at the macro.
Soona, your industry has a tremendous ability to just create new coins. There's only 21 million Bitcoins that will ever exist, but every day there are new coins. And we were joking around yesterday because someone created a new coin. It was a joke coin named after me, but it's very easy to just manufacture new coins. How much does the impulse among players in crypto to create some new coin of their own, some new token project, rather than building on an existing one, end up having the effect of swamping the demand with so much supply and limiting the upside price?
Right. So we do typically see that in bull markets. That's absolutely true. The great thing about the way we've designed our thesis at Volt Capital and what we focus on are the companies that are building around these digital assets. So those are truly the indicators you should be looking at when measuring the health of the market. These are founders that are building equity companies that are leveraging digital assets because the end user is meaningfully using the service. They're typically 10x better solutions than anything else on the market, and it really doesn't matter what tokens you're minting or who's coming out with any joke coin,
Right.
because these are really substantive use cases, and that's what we focus on at Volt Capital.
All right, well, let's talk about the prospect of regulation here, because this is now back in conversation, not only given today's moves, but even before today, there was a lot of talk about it. There was actually a hearing going on Capitol Hill today that kind of got overshadowed by all of the market moves here. Are you sort of welcoming of some degree of regulation, some degree of signposts, of speed limits here in the market, or does that sort of erode the appeal of what Bitcoin and crypto is to a lot of people?
There's a common misconception that crypto as an industry isn't regulated, but crypto has been on the desk of every 3 to 4 letter organization you can think of since 2013. And corporations, venture firms, nonprofits are pouring in millions to making sure that we standardize the language and are doing everything by the book to the extent that we can with this new asset class to ensure that this technological paradigm shift actually happens and we keep the retail investor and institutions in mind and do things by the book.
How much do you see people getting excited about ETH and getting ETH pilled, so to speak, because they're excited about DeFi and trading on Uniswap? And how much do you see that sucking some of the energy away from Bitcoin itself?
Look, speculation is not a bad thing. Speculation is often necessary to get people to look up from their desks into this new interesting thing on the horizon. We're seeing plenty of substantive use cases being built on top of Bitcoin, with Bitcoin, and outside of Bitcoin. Uniswap, Eclipse, for instance, Coinbase's volume. Yeah. And seeing indicators like that is absolutely a net positive for the space.